Welcome back to the Retire Young radio show. I am your host, Joshua David, on a mission to improve financial literacy worldwide. Also, don't forget to subscribe to the podcast on Apple Podcasts, iHeartRadio, and Spotify. Al, as we get to this next topic, it's retirement. We talk about it every week. And we talked about earlier the shorter term style of trading. You know, you have short-term trading, you have long-term investing. I want to talk more about the long-term investing, not buy and hold, but the longer term where investors can potentially be in trades for or investments for, you know, sometimes a few years at a time for their retirement bucket, their 401ks, IRAs, 403bs, TSPs. When we talk about retirement, that's what all those retirement buckets are. So we didn't finish what the Forex market was, because a Forex market is actually, you know, a lot of people like to use that for longer term strategies because they trend so well. So what is the Forex market, and why would somebody want to use that in their retirement account?
Well, the Forex market is where you're looking at the difference in exchange rates between two different currencies. So it gives you the opportunity to participate in what's happening on a global basis. All the big companies that are international companies, they trade the Forex market on a regular basis. There are a lot of companies that do that, and fortunately for us, they really provide a market so we can, as investors, we can participate in that market also. We can use the foreign exchange market for shorter term trades, but just using different time frame charts. And we teach our students how to use different time frame charts for different purposes. But Forex can be used as a long-term vehicle for your retirement, for your wealth bucket. So you have some opportunities there in addition to the stock market or mutual funds. And most of the people listening, Josh, are probably in mutual funds. And the primary reason that is the case is that, well, number one, the commissions, the payout to financial advisors is greater with mutual funds than it would be for individual stocks. It's a great investment for the financial world. When 401ks first came into existence back in the 80s, it just blew up the financial or the mutual fund market. It just made it a huge, huge market that Wall Street is really taking advantage of. But mutual funds, we always talk about the disadvantages of them. Even if you have them, if that's the only choice you have, say in a 401k, there are ways of managing that. And using the foreign exchange market, the futures market, the options market gives people the opportunity to be more hands-on, more proactive. Now, you can't use those in a 401k or most of the employer-sponsored plans. A self-directed retirement account you can, or just in an individual portfolio, you have the opportunity to use those same assets that the smart money is using. It gives you an opportunity to participate in a down market. There are strategies that can be utilized there.
So what is that down market? Explain what that means.
Well, that is simply when the market is trending down. I mean, we see that occasionally where maybe the Dow or the S&P is down, 1 or 2 or 3 or 4%. The Dow, we've seen numbers here where we'll have days where it's up 400 or 500 points, then maybe down 700-800 points. That's when it's down. Unfortunately, for most people, they are just sitting by watching their portfolios go down in value. Let's just say that you go through a bear market like we had in the year 2000 and the year 2008. And portfolios were down sometimes more than 50%, but let's just say you're down 50%. There's the problem with riding a down market and not being proactive in how you manage it. That 50% drawdown means you have to have a 100% return just to get back to where you were before. A lot of people, even in your 401ks, there's typically a safe harbor investment. If you know how to use the right investment strategy, and our core strategy is a timing mechanism. So if you can time when, say, a mutual fund is moving into a sell zone or moving into a buy zone, it gives you an opportunity to be more proactive and to maybe have the potential to get much better returns from your 401k.
Yeah, a lot of people think the down markets is something wild and crazy, and the markets are really actually pretty simple. They're basically just an exchange of money from the people that don't know what they're doing to the people that do. I mean, I always, I teach a lot of these investing classes, and I always ask people, where does the money go when the markets go down? Some people say, well, I think I don't know. It doesn't disappear.
It doesn't evaporate.
It just goes into somebody else's hands. And that's why you need a core strategy that's designed to help you in up markets, that's designed to help you in down markets. So Al, with retirement accounts and strategies, there are a lot of people that are listening that have an IRA.
Correct.
And they may self-direct it potentially with a bank or with a broker, but they really are not sure if they're doing the right things, but they're just guessing, right?
Right.
So explain a little more detail on what people can do to participate, I guess, and have more comfort and confidence to do that with the knowledge and the skill.
Well, that word, that confidence word, is one that we talk about a lot, and this is really what confidence and comfort in investing and trading is. It's where you know what to do, you know how to do it, and you know why you're doing it. It depends on more than just what you know. It's the skill to use what you know, and that's really what I think what we really excel at is helping people develop the skills to be able to use that knowledge properly. And to do that, it really requires repetition, but it requires repetition of something that is working, that is the correct thing to repeat, and it really requires the guidance and the support of someone or some people that have developed the skills already. They've gone through the years of learning and they've applied it in the real world. And that's who you want to have help you develop these skills.
So, Al, I want to ask you a couple of questions about that. It takes knowledge and takes skills. What if somebody is, brand new to the markets? They have 401ks and IRAs, but they've never done it before. How does somebody gain that confidence?
Sure. It really comes from education, that combination of knowledge and skills. And it should be, we think, an educational source that not only gives you the knowledge, helps you build the skills, but provides the right tools and resources, helps you develop a plan that includes those things, that core strategy, that timing mechanism, the right assets to use for you during different market conditions and different times in your life. And then the most important component is how to protect what you have. It's that risk management. And when we were talking about the leveraged assets, where I can almost guarantee you that when people hear somebody talking about futures and Forex, the first thing that they think about is loss.
It's
how
opportunity,
much they can lose. Right. But what is important to understand is that for our students, we would never have them be in a position where their full investment is at risk. Maybe you're only willing to risk $50 or $100 on a position or a trade or investment. That's fine. That's what you plug into the platform that our students use to do the workup, the analysis of a trade. You control that. You decide what that level is. So don't think that everything that you put into a position or trade is at risk. If that is the case, then you definitely are doing this wrong, and you need some guidance.
Well, when it comes down to trading and investing in retirement accounts, it comes down to having confidence. And where you do that is you have to gain some knowledge, and it comes down to education, where you learn different techniques and different strategies that are designed to help you in the financial markets. And we have these investing classes that we teach right here at the Academy, and these are basically classes where we've taught thousands, just like you, are many strategies which are designed to teach you to make better investing decisions. And then also you have to have a core strategy to follow, and then follow a plan, but rules within that plan. And the rules, you want to try to make them simple. And that's why it's so nice about these investing classes, Al, that you teach, because you explain some of these rules, and they're actually kind of basic rules for people to understand.
They are, right. Keep it simple.
That you would put in any plan that you would do for anything, just like driving a car. If you're going to one place to the other, you're going to start somewhere. How are you going to get there? Al, we've covered a lot of different topics today, as far as short-term trading, longer-term investing. I kind of want to corral that all together into a trading and investment plan, because there's a lot of listeners that just don't know how to start. Hopefully what we're talking about here today will encourage you to start, but you want to do that with the right knowledge and the right skills, but have that proper plan. So coming up next, we're going to talk about how to have a plan in the investment world, but also how to start even if you're brand new. This is Josh and Al with the Retire Young radio show. We'll be right back.